management's good intention about communicating about the business can backfire. Shareholders might sell the stocks and then the stock price will decline. And that's exactly what happened last week. We're going to talk about that example. And you're listening to Investing Mastermind Podcast. I'm Sina Lundhold.
And I'm Michelle Markey.
Last week, we saw a perfect example of a business where management was being honest about what is going to happen in the future. I'm talking about Nike, the famous sneaker and apparel company doing sports clothes. What happened last week was that the fourth quarter earnings report came out. The annual report from Nike was published, and again, you could see earnings was declining, sales, also called revenue, was declining for the business. And actually, the stock price fell almost 20%, which is the worst single day decline in Nike's history. So it was a decline from around $94 to in the 70s. And what happened again was that management was being honest about we're not doing well, we don't see sales, and we might actually not see an increase in sales until 2025. So they were being honest about what is actually going on right now, that what they can see is that people don't spend money buying apparel. People don't spend money right now on sports clothes, etc. So they can really feel that people are sitting on their money. And that's a general trend that they're seeing. So, Michelle, have you been following?
Well, with the apparel industry, I don't usually keep that much tabs on it other than seeing some headlines with the Wall Street Journal. But one of the things that it makes me think what you're talking about is I saw some recent headlines saying that Nike has fallen behind in the running world with other shoe brands gaining more market share in terms of like Haka or New Balance. There's several other brands that maybe are taking some running market share from Nike, as maybe they'd been focusing more on basketball shoes or, more fancy shoes that people want to buy immediately when they come out, and then they hoard the shoes and then they sell them at incredible markups online, or, wherever they have special street sales of these coveted basketball shoes that the biggest basketball stars wear. So maybe Nike's focus has been away from where people do need shoes. Like, I know my brother, he's a runner and he buys shoes, but he's not buying it from Nike when he's running. So the interesting thing is, even though there's demand, maybe Nike hasn't been focusing on where some of the demand is coming from. And maybe they've exhausted a niche that was doing well for them for a while, like NBA and maybe some other areas that they tend to do well in. But maybe sometimes, how you never have anything good last forever. That could be a little bit of a situation we're seeing with Nike, is that like their current marketing and sales strategy is getting a little bit old and they need to rebrand, or they need to be re-inspired, because if they're trying to be this lifestyle brand and people are not really buying into the lifestyle as much, no wonder their sales are hurting. And even though it's maybe nice, like we look for management to have candor, but when they're saying that what they're doing is not working, that can obviously lead to a lot of typical investors in a stock selling off a stock. So, like, most people are not going to wait for Nike to turn it around. Like, they're going to get scared now because they only want to be in a stock for 3 to 6 months. A lot of people are not long term minded. And if they only want to be in a stock for a short term, like, especially a lot of funds on Wall Street are not necessarily thinking long term, then no wonder they're dumping the stock now. But maybe they'll buy back in a year from now and say, like, okay, Nike has fixed their problem, let's buy back into the stock. So that's some of what's coming to mind when you mention that.
Yeah, and it's some really good points that you're sharing here. Deckers, which is behind Hoka, is actually doing better than Nike on their, several parameters, and actually winning when it comes to competitive advantage for those two businesses. I think the reason why I wanted to bring up Nike this time is exactly what you're saying, Michelle, is that, shareholders aren't willing to necessarily hold on to the stock for the long term. They're selling off Nike right now. And, we can't predict the future with Nike. What we can see is that the earnings are declining and it has been declining for some time. We can see that in general, with the apparel market, that people aren't buying as much apparel as in the past. Nike has, as mentioned, also said that they believe that this is going to continue until mid 2025. But like everybody else, they can't predict the future. So potentially it could be even longer. Maybe in mid 2025, they'll come out again and say, oh, maybe it's going to be mid 2026. But what we can see is that earnings are declining, and what Nike have told shareholders it is that they're going to shift their product portfolio towards newness and innovation, and that requires money because innovating requires money. So this might also impact their margins when they need to actually spend more money on innovation. So right now they're doing great on their margins, but usually when there's a lot of inflation, company chooses to not innovate, but actually bring back some of the popular things into their portfolio, like we've seen with, for example, Apple, where they've stopped innovating. For example, the driverless car, they stopped innovating on that and going back to the core, which is the phone, which is their bestseller. And we see that with multiple companies, with Coca-Cola. A couple of years ago, when people were spending a lot of money on soft drinks, you could get all kinds of different flavors in the supermarket, like cactus flavor or something crazy like that. And now they are pulling that back so you can get the evergreens, Coke, Sprite, Fanta, the flavors that are bestsellers. And then the vanilla Coke, you can't get that anymore because they need to be mindful of their margins, of how much they actually are spending on operations. So that's some of the things that's happening these days with Nike. They're actually not the only ones that are feeling shareholder are kind of, getting a little bit unsure if it's the right time to invest in brands. And Michelle, as you and I know, Nike is not the only apparel company that's struggling these days.
Yeah, another one that's been hit hard seems to be Lululemon, which is a supreme favorite of a lot of women who like to have their yoga pants. And for a while, they were one of the favorites of the apparel industry. And now they're down 40% year to date, I think, from their all time high of around $500. And now they're a little bit under $300 a share, which is incredible. And I mean, Nike is not as bad. They're about down 30% year to date, I think. But for Lululemon to be down 40%, that's rough. And I don't know exactly what's going on with Lululemon, but my thought is maybe people are just not needing to buy fancy yoga pants as much. They still have their good yoga pants from the last few years that still work because the Lululemon made great quality from what I've heard other people describe them as, that people are still just set. Like they don't need more right now. And I feel like when you as a consumer have enough clothes, then you know how much more can you get unless you're just a shopaholic and then you kind of just keep going nonstop. But for a lot of people there is a limit, and maybe Lululemon has just saturated the current market and they don't have much of a growth window ahead for the time being. What have you heard, Sina, about Lululemon?
With Lulu, one of the things that people talked about why the stock price declined initially was because their head of product left the business, which kind of caused an initial uncertainty. And then soon thereafter came a quarterly earnings report saying that there had been a decline in sales. So again, the, apparel industry, the athletic industry are seeing a decline in revenue. So again, that made the stock price fall even further, but then it actually started going up again. Kind of, what they did was they did a restructure in the management team. So now they're doing a little bit of restructuring after the head of product left. She got a job at Vans, a shoe company. So yeah, that initially made the stock decline, and then it went up a little bit again. But then after Nike actually came out with their report, what we saw was that the stock price went back down. And again, because Nike did mention that this is something that they also see in general, like macro trends is showing that people are not buying any type of product in this segment right now. So again, when the outlook is like that, then as you also mentioned earlier, some of the big hedge funds that are only trading for the shorter term will leave the stock. I think it's kind of interesting with Lulu. I'm definitely following it closely also because I know quite a lot about the business. I'm personally a big fan. I'm sitting here in my Lululemon leggings. You can't see that. But also, I really like the business and the stock. I really like the CEO. He's got some really grand strategy plans, which is it's also interesting because what Lululemon wanted was actually they wanted to grow within the men's segment. So they've been known to doing yoga pants for women, and to a large extent, that's how they're still known. Most men don't necessarily know that there's something for them and might not even want to buy Lululemon because it's so well known that it's female yoga pants. So what the CEO did was he said, well, we want to increase sales for men, and they haven't really been successful in doing that. But he's really succeeded well with his other plans, and I know he's very, very clear on what the company goals are, what they're pursuing, and exactly in what segment. So it's going to be interesting to see. I've also read that in terms of brand, they still have many, many opportunities. It would require a lot of marketing for them to be more known. It's only 25% of the US population that knows about the Lululemon brand, which means that, there's a really, really big opportunity there for actually getting even more people to know about Lululemon, both men and women. So
Yeah.
there's great potential.
And what if you think it's just a cyclical situation right now? Like, with where we are with the economic cycle, not to get too macroeconomic on us with some of these stocks, but perhaps there could be some of that at play where there's been a lot of interest rate hikes and that's led to high interest rates. So maybe companies aren't taking as much debt out to try to do growth initiatives because that's usually what they do. So as businesses pull back to not pursue as many growth initiatives for expansion, naturally less customers see it because they don't see as much marketing and then they don't think of buying it as much. And then it's just kind of going through a certain cyclical cycle of a pullback, which is natural based on the economic cycle. So it's very possible that these companies are doing everything right, but they're just a little bit unlucky right now and going through a little bit of a mini event of like, there's a little bit of not as enthusiastic consumer spending right now. And that could be affecting a lot of areas, not just apparel. So it's not just Lululemon and Nike that are suffering, but probably a lot of companies that aren't AI stocks right now. So, with that, I mean, I think there's hope. If people are interested in these companies, they should keep studying them, keep doing their homework, figure out what is a great buying price because maybe if they're not yet at a great buying price, maybe they will be the more that the current market sours on these. But that maybe these stocks will come back in 2025 or in the future. I mean, obviously, like Sina said, nothing is promised and nobody can foresee the future. But if you do your homework, you can recognize an opportunity when there is one. So, unlike everybody else who's just speculating, if you know your stuff, you can be in a position to take advantage of opportunities nobody is seeing right now because who knows, maybe a 40% down Lululemon is a great price for the stock. I have no idea because I've never been a Lululemon shopper and I've never studied it really. So I have no idea if the current price is good or not. So that's what I'm saying. I can't recognize if there's an opportunity in Lulu right now, but maybe someone else can. So that's where, this is obviously not advice. You have to do your own homework, but if you recognize it, It could be fruitful for you someday, not to put a pun on the lemon part of Lululemon.
Oh, great one. So, yeah, I totally agree. And today we did talk a lot about stock price. It's important to also say we're not trying to, tell you guys that you should look at the stock price. That's not the numbers. We want you to make sure that you understand. It's, again, around are they being, spending their money well in the business? Are they, setting money aside for growth initiatives? Are they keeping their margins really slim so that they only have the minimum expenses, especially right now where they need to? So it's about looking into the business rather than looking at the stock price. Today, we talked a lot about the stock price because something interesting is happening. And also, as Michelle mentioned, I'm not recommending either Nike or Lululemon, but these are some examples of events, mini events, things that are happening in businesses that does impact the stock price. And what you should do, just like Michelle mentioned, is that you should do your homework, look into the business, because you could potentially grab some wonderful businesses out there at a premium price, and maybe they aren't that great. Maybe that's why the stock price is falling. And that's what's important for you to actually try to your very best to actually find out. Michelle, do you have any final remarks before we're ending the episode today?
Not really, but just do it.
You're full of the little puns today. So, on that high point, we're going to say, have a great rest of your day, and we'll be back on Tuesday.
Till next time.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts so you automatically get new episodes in your feed. We publish a new show every Tuesday.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice. And if you need help in your personal situation, please consult with a professional.